Look at Zoom Communications, stock ticker ZM, as it jumps post-earnings. George Tsilis is here to help me break down the news behind the move. George, it looks like kind of an inline report, but one that shows maybe margin expansion and also nice guidance on the EPS front going forward. What did you make of it?
Yeah, I think there's some implied margin expansion in these numbers. I mean, first off, on an EPS front, they were expected to come down slightly by 3%. $1.30 was the print expected, but they came in at $1.43. So they actually beat the estimates by a quite amount, of about 13 cents. If you look at, so that's a 10% beat. But if you look at the revenue, it pretty much came in line, approximately 1.17 billion. It's about 2.5% compared to the same quarter last year. Some of the things that they denoted were there's a little bit slower EPS estimates for next quarter, but they actually raised the entire fiscal year 2026 EPS number from $5.37 on the high end to approximately $5.59. That's a pretty meaningful increase. If you look at the sales number on the high end for the year at 4.79 billion, they actually moved it higher to 4.81 billion. So they are starting to incrementally increase their top line sales guidance, but they did meaningfully increase their EPS guidance. Now, the stock is trying to make some ground to the upside, meaningful ground to the upside. It's up about $1.50 or so in the after hours, but I think what's going to happen here is this my view of it, that the analysts are going to be looking for the quality of that EPS number that's moved higher going forward. Is it going to be a function really of margin expansion because of lower cost of goods sold, or effectively higher customer count that spends more dollars? In other words, they're the million plus customers, or at least $100,000 plus customers that are increasing. Or, and this is another thing that could be a possibility and why they increased that EPS guidance number, is share buyback. Because if you look at the cash on the balance sheet, it's around $7.8 billion, and that's quite meaningful compared to the $25 billion market cap. That's over 30% of the market cap is cash. So, with growth estimates somewhere in the 3% range on sales, and around 2.5% to 3% on earnings, this company's not growing like it once was. I mean, if you look at the 5-year average growth rates in sales, it's around 41%. So this is no longer a growth story for Zoom Communications. This is really a value and capital allocation story. There's a lot they can do, I'm sure, to improve efficiencies, increase their margins, which they denoted as they're moving their targets higher for the fiscal year. But, I've seen this a lot before. They may end up tucking some sort of share buyback in their conference call. It's possible. I'm not saying they're going to do it, but it is certainly possible considering the amount of cash they have on the balance sheet.
It does, too, come to show that they are focusing on that greater than 100,000 trailing 12-month sales category, so the bigger whale-like enterprise customers. And I guess it makes sense. I mean, we're at a point now where probably for their core product, we've reached market saturation. So now it's going to be, how do you expand, cross-sell, build on that relationship, especially with those really bigger enterprises, even if they're medium-sized, but bigger ones in terms of dollars spent that are going to be more likely to buy those additional products and services. Final thoughts on Zoom is the stock reaction is pretty subtle here, George.
Yeah. It is. And so, again, because it's a subtle move in the after hours so far, it's well contained considering the market maker move, which is, I believe, is between $5 and $6 expected. But I've seen this before. It certainly can move based on some new insights on the conference call. And I think cross-product offerings is something they need to probably work on. They're probably going to be doing that because they're competing with other companies like Google and Cisco, as well as other names out there in the communications as a service space, which again is becoming more competitive. And those other businesses don't necessarily need this core type of service to increase their total top line sales meaningfully like Zoom does, because it's really their core business. So, their revenue estimates are increasing slowly. EPS estimates are rising faster. So it could be a function, like I said, of something they're doing to enhance efficiencies operational-wise. But I'm sure that's going to be telling once the conference call comes about, and we'll see how it opens tomorrow.
Thanks so much, George Tsilis. Always great insights and good breakdown for Zoom Communication earnings. The stock inches higher post that report. We're going to take a short